SoundHound has been sliding for the past couple of days, but you do not need to worry. And in this video, I'm going to explain to you why and what you can do to make it even better for yourself. Don't worry about subscribing, tapping the like button, or looking for the coaching and Discord link. We'll get right to that after we dive in and talk about SoundHound. So there's a lot of things going on with SoundHound. It's not just the stock itself, it's the overall market sentiment. First and foremost, we had PMI data that came out twice, services and manufacturing, in the last 7 days since New Year's. And not only that, we also had the service index as well as the FOMC meeting. Just so you know, the FOMC, the Fed minute meetings, are particularly revolving around interest rates and interest rate cuts, and whether or not the Feds are dovish or hawkish really is what dictates the sentiment of the market for the most part. And one of the big things about this is when you have all three of them in 1 week, the volatility increases. There's a sell-off, not to mention the markets are also reacting to inauguration, a lot of other political data, and the price of gold, Bitcoin, crypto in general, and of course the dollar and crude oil. A lot of things are creating this influx, and not to mention the 10-year yields are increasing over the 2-year yields even more. That's created an imbalance. Even though typically that's a good thing, it's all these changes and all these things that are going on at one time. And there's a lot of anticipation going on for the Fed minutes meeting yesterday on interest rate cuts. And so there's a lot of sell-offs happening. Not to mention Cathie Wood and a lot of insiders were selling Palantir. Nvidia also went down, which in turn brought Serve Robotics down, as well as SoundHound, because there's some sympathy there. Just like there's sympathy between Bitcoin generally and crypto with MicroStrategy. There is a correlation there because MicroStrategy leverages Bitcoin as part of their treasury yield. So when we sit here and we think about everything that's going on, there's a lot of uncertainties in the market, especially related to the economy and what's going on with the inauguration this month. We also have to think about tax loss harvesting, which just ended only a week ago, and the fact that for 30 days, there is a wash sale rule where anyone who sold for losses to offset taxes can't buy the same assets back. So there's a lot of money going to be coming back into SoundHound near the end of January, beginning of February, and there's also earnings coming up. A lot of people are still taking profits because of that. Not to mention, during the Fed minute meeting yesterday, it was pretty much discussed that interest rate cuts would not be happening in January, and that we're still pretty much on par for interest rate cuts, just not as soon as we expected. There's also some things I want to discuss about SoundHound in the market. I also want you guys to understand that 4 members, voting members at the FOMC, are being replaced, and 3 out of 4 of those members are hawkish, which means that also plays a role in what happened after the FOMC meeting yesterday. Typically after an FOMC meeting, if things aren't critically bad or terrible and they're generally neutral or good, the stock market recovers the same day in the afternoon. That was not the case yesterday, and that's because the 4 members that are being swapped out are being replaced with 3 hawkish members, which are bearish. This is not good, not at all. So let's go over some things with the market and sound, and let me explain to you guys what's going on. This is not necessarily a bad thing. It's just short term, you have to hold. The key takeaways with the FOMC meeting was that the Federal Reserve Policy Committee's annual rotation gives more votes to hawkish members this year, whom experts see as more inclined to keep interest rates higher. The Fed is balancing the need for rates high enough to subdue stubborn inflation while avoiding crushing the economy. The central bank is on a collision course with incoming President Donald Trump, who has pressured the Fed to lower rates and boost the economy at the risk of stoking inflation. The Federal Reserve's Policy Committee is changing for 2025, and the turnover could affect the central bank's decision on setting interest rates. The Federal Open Market Committee, FOMC, the group responsible for setting the influential Fed funds rate, will swap out 4 of its voting members this year in regular scheduled rotation. 4 presidents of the Regional Federal Reserve Bank will be voters: Austin Goolsbee of the Chicago Fed, Susan Collins of the Boston Fed, Alberto Musalem of the St. Louis Fed, and Jeffrey Schmidt of the Kansas City Fed. Austin Goolsbee is the dovish. The remaining are the hawkish. They will replace Thomas Barkin of the Richmond Fed, Raphael Bostic of the Atlantic Fed, Mary Daly of the San Francisco Fed, and Beth Hammock of the Cleveland Fed. The changing of the guard could make the central bank slightly more inclined to keep its benchmark interest rate higher for longer, which would push up borrowing costs for all kinds of loans. That's because the committee is gaining 3 members considered hawks by some experts. Collins, Schmidt, and Salem. One dove and one voter rated as neutral by analysts at Wells Fargo. Overall, the results is a nudge in the hawkish direction. In avian economics jargon, FOMC members are considered hawks if they generally favor higher interest rates to stifle inflation, while doves are more inclined to lower rates, which inject more easy money into the economy and boost business and spending. The hawk-dove bias of each member depends on which expert you ask, but several economists saw the balance of the FOMC becoming more hawkish with the changeover. In commentary, economists at Deutsche Bank said the composition is now skewing in a somewhat more hawkish direction relative to last year's group. The 12-member committee consists of 5 governors of the Federal Reserve System, the presidents of the Federal Reserve Bank of New York, and 4 members who rotate yearly among the 11 other regional banks in the Federal Reserve System. New York has a privileged spot because of its status as the nation's financial capital. The turnover takes place at a crucial time for the Fed, which is attempting to keep interest rates high enough to subdue stubbornly high inflation while not keeping them so high that it drags the economy into a tailspin. Their job will be complicated by the changeover in presidential administration. President-elect Trump has a history of clashing with Federal Chair Jerome Powell, has said interest rates are too high and could implement policies such as tariffs and rate cuts that push inflation up. So while sitting here thinking about all of this, this is what's affecting the market, which is in turn affecting SoundHound. But now we're going to dive into what's going on with SoundHound, look at a chart, and I'm going to explain to you guys why you shouldn't be upset or panic and why this is just a buying opportunity. Don't let them shake you out of your stock or owning shares of SoundHound. But first, if this is confusing you and if you're new to investing or you're just looking to retire and don't know where to begin, or you're having a hard time and this overall market is really making it difficult for you, I would love to help you guys. I am driven every single day to help new investors like you achieve their financial goals. It's what drives me. It's what I enjoy to do. I love helping others succeed. If you guys are interested, I offer full Discord, training course, and one-on-one coaching. You guys can sign up at any time at investwithcorey.com. The link's in the information box below. You can see the profits my students are making on the screen. Even in a down market, there's always opportunities to make money. But don't take my word for it. Let's take a listen to what my student Shane had to say.
When I first started off with options, I knew nothing at all. Corey's program broke it down into very simple steps. Corey broke them down where it was nice and simple, and I was like, oh, okay, I totally understand that now.
How much are you up since the start of joining my program?
Oh, you know what? Hold on, I'll give you the exact number. Let me bring it up. On average, I was making about $2,200 a month day trading. That was average. In the very first month that I started actually selling options, it jumped up to $14K. And right now in December, I'm already up 6.4 thousand.
You went from day trading to my course and you were able to go from 2,200 to 14K.
Correct. And I'm up 165% right now.
If someone was trying to decide between my program or another Discord, what would your direct and short message to them be?
Corey's program will save you time and make you money. That's the bottom line right there.
What would you tell someone who is skeptical about learning from someone online like myself?
I bought into multiple different programs. From my experience, Corey's is the safest, very consistent and profitable.
How long did it take you to actually make back the cost of joining the Discord?
From the time I started trading, I made my money back in 2 weeks, 10 days. If you want to count the actual trading days, 10 days. And then I just looked at it and I was like, holy cow. I'm like, I just made $14,000 this month. I'm like, that's like crazy. And, just 1 month, it blew away, almost my entire year of day trading.
What did you start off with in my program? Total capital portfolio. And what are you at now with profits?
Started off with roughly 50,000. I had 25-ish already in stocks. And now I'm up to 75,000.
So you heard my student Shane had to say. This success story could also be yours, because if Shane can do it and my other students can do it, you can do it too. Just go to investwithcorey.com, click on training on the website, and then watch the video and book a call with my team and I so I can help you achieve your financial goals. And I look forward to helping you when you're ready to commit and achieve your financial goals. Shares of SoundHound AI surged around 836% in 2024. The voice artificial intelligence AI technology leader benefited from rising demand for its offerings and its significant growth opportunities across key verticals such as automotive, restaurants, and customer service. While SoundHound stock has gained substantially, at least one Wall Street analyst expects shares to reach $26, the street high price target. This represents about 45% upside from its last closing price of $17.98 on January 7th, which is actually even more considering it closed at $15 yesterday. Let's dive deeper into SoundHound's stock and outlook for 2025. SoundHound operates in a $140 billion total addressable market with high barriers to entry, giving it strong competitive edge. Its diversified customer base is reducing reliance on one-time deals, creating a more predictable and SaaS-like revenue stream. SoundHound has been growing rapidly since 2020. The company's revenue has increased at a CAGR of 51%. In the most recent quarter, it reported $25.1 million in revenue, representing 89% year-over-year growth. Moreover, its top line surpassed Wall Street estimates of $23 million. Looking ahead, SoundHound's growth trajectory appears sustainable as it scales its operations and deepens its presence across multiple high-growth markets. As a leader in enterprise conversational AI, SoundHound is embedding its AI-driven solutions into hundreds of enterprise brands, creating a strong ecosystem of customers and partners. Its diverse portfolio is expanding, and it's poised to benefit from a broader addressable market driven by the increasing adoption of AI. SoundHound operates in markets projected to grow substantially in the coming years, creating a dual growth engine, which includes its own rapid expansion and the explosive growth of its target markets. The company's automotive portfolio is thriving, with strong traction in the electric vehicle sector. In the third quarter of 2024, it secured a significant deal with an up-and-coming EV manufacturer in the Middle East and strengthened its presence in China and India. Additionally, SoundHound has expanded its AI agent customer service portfolio, making headway into industries like financial services, healthcare, and retail. One of the world's largest payments card services companies recently extended its contract for another 3 years, highlighting solid demand for SoundHound's technology. SoundHound solutions cater to the businesses of all sizes, from large enterprises to small and medium businesses. For example, its smart answering service has gained traction with SMBs, representing $30 million market in North America alone. SoundHound continues to innovate in the restaurant sector with AI-driven solutions for drive-through operations, phone ordering, and employee assistance. These offerings are expanding into new brands and deepening relationships with existing customers, positioning it well to accelerate revenue growth. SoundHound's strategic acquisitions and partnerships are unlocking significant revenue synergies. The company is cross-selling and upselling its products across verticals, further scaling its automotive, AI agent, and restaurant businesses. Thanks to the ongoing momentum in its business, its cumulative subscriptions and booking backlog, a key indicator of customer activity, continues to grow. This metric highlights SoundHound's ability to secure long-term contracts and deepen its relationships with key partners. While SoundHound is growing rapidly and focusing on capturing growth opportunities, it is also focusing on driving efficiencies and moving toward delivering sustainable earnings. The bottom line is SoundHound is expanding its total addressable market through innovation and new product offerings. The company's ecosystem of customers and partners is growing, and its technology is becoming increasingly integrated into industries worldwide. These factors position SoundHound well for sustained growth in 2025 and beyond. While its growing scale, innovation, and solid growth opportunities, SoundHound could hit $26 street high price target in 2025. So you can see here SoundHound has retraced about 50% of its run since the beginning of December. And a lot of this is being retraced due to Donald Trump taking office, the inauguration, the Fed minute meetings, the overall economy, the uncertainty of what's going to happen when Donald Trump takes office due to the indifference between the Feds and Donald Trump and the way he likes to do things. So there's that to think about as well. We can see most of the upward trend since November 5th, which was right around here. Most of this uptrend, about 40% of it, 35-40% of it has been retraced. There's a lot of support in the $15 range as well as the $13 range. It's my guess and pretty much my estimate that SoundHound will find a new home in the low to mid 13s while it works its way up after inauguration. So it's not likely that SoundHound will retrace all the way back to $5 or $6. There is a very, very strong floor at 13 and an even stronger floor at 9 and 10. It would be very, very unlikely to retrace all the way back to $8. I'm thinking that if it falls below 15, it's going to find a home between 13 and 13.50, consolidate, and then work its way back up. Something sort of in this fashion right here. It'll come back up a bit maybe this week and next week, then come down, bounce, and then as we go into inauguration time and February, do something like this. This is very honestly likely, this scenario right here, or it could drop and then do this number right there. But either way, I think they intertwine and move in tandem. It's just whether or not the stock pulls back into the 13s, bounces off a solid support, and then it runs back up going into inauguration and earnings, or if it goes a little higher this week and next week, rejecting 15, but then ultimately pulls back into the 13.50 or 14 range. But either way, it sets us up for a perfect opportunity to buy more shares, dollar cost average, and get more of a position. Because like I told you, SoundHound is going to do well long term, 1 to 3 years, no problem. 2025 is also no problem. But it's the beginning of the year and right before an inauguration, right before the Fed minute meetings and right after the Fed minute meetings. And we just had 2 PMI datas come out. Although PMI services expanded yet again and things are getting better, there's also something to think about here. Overall instability because of the uncertainty and the volatility. So of course SoundHound's going to pull back, just like every other stock has pulled back. This is a buying opportunity. You can sell puts. And what I would do is instead of going out weekly and selling a 15, which you could do, or a 14.50, I would go out to the end of January and sell a 13.50 or a 13. Because if you get assigned at 13, it's a bargain. If you don't, you collect more premium. Let me show you exactly what I'm talking about. Let's look at the Bollinger Band. When we look at the Bollinger Bands on the 4 hour, we see the bottom is 1490. It's stretching the bottom of the Bollinger Band right now. Even on the daily chart, it's about halfway, which is what I use to average. So when we look at this, the bottom is right there at 13. When we use the daily chart with a standard deviation of 2, which is what I'm using, it gives us a 96.7% accuracy in the weekly to bi-weekly, meaning in the next 2 weeks, the likelihood of SoundHound dropping below $13 is less than 3%. When we go to the 4 hour chart, it's already bouncing off the bottom. So we're going to get an uptick and it'll bounce off of the 100-day most likely. So we're going to see something to, let's go to the 4 hour chart, something to this effect right here. Like I said, we're going to see it come up and bounce. And by the time we get into next week, it's coming down. And if you have a 13, your break even's down here. The stock has to drop all the way below, and it coming all the way down here to $10 or $11 or even $12 is kind of unlikely. So 13 makes it a very, very good spot, which I just showed you the technical analysis for that. It's also completely oversold. If we look right here, you'll see it's completely oversold. So what we're going to do here is we're going to go to SoundHound and we're going to sell puts going to January 31st. And we're going to sell 13. And we can see here, $13 puts are $100 with a delta of 28. That's a little on the high side. So what I would probably do is I would sell 10, 11, or 12. And if you really want, you could sell 13s. But just selling $12 puts, we could generate $75 to $84. So what we'll do is we'll probably get filled at 80, maybe wait for the stock to drop a bit tomorrow when the markets open. And if we were to sell 5 of these, you would only need about $5,000 collateral to make $400. Now, granted, we are going out 2 weeks, but that's $800 a month on $5,000. So it's almost $1,000. So it's about 15% a month. This is a very good return. I would personally sell $12 puts on SoundHound because if we look where $12 is, it's right down here, which is very safe. The stock dropping all the way down here to $12 could happen, but if you get assigned at $12, no sweat off your back, because then when the stock does run back up, you're in pretty big profits. If we go back and we look at the $11 puts, they're about 60 bucks or close to it. $10 puts are worth about 35. Earnings are in February, so you could realistically go out to February 7th and sell 11. And an $11 put will get you a decent amount of premium in February. If you can see here, it'll be about $65. So if the stock drops tomorrow a little bit and you can get 70, now you could get 350 bucks to go out 3 weeks on an $11 put for about $5,000 collateral. Unless, of course, you're selling naked puts, then you're only going to need about $1,200 bucks, $1,500 to do it. And that's not a bad way to make money. Making $700 to $1,000 on 1,000 collateral, it's basically, if you don't get assigned, it's 100% return. It's very good. Just do your due diligence and try not to put any more than 10 to 20% in any one position. I really like to keep it to 10%, but that's what I would do. I would sell 11, 12, or $13 puts going out to the 31st or the 7th of February, because this is going to give you premium. And if the stock goes up, then you can raise your target from 11 or 12 to 13. Whatever strike price you pick, say 13, go up $1. If you're doing 13, go to 14. If you're doing 12, go to 13. Adjust accordingly so that your delta is about 10 to 15, maybe 20. This way you're collecting premium, and if you get assigned, no big deal, because you're getting it at a much better price. You see, there's no need to worry. SoundHound's a great company, and nothing technically or fundamentally has changed. I told you many times, we just have to get out of January, as it's a rough month. Buy the dip, dollar cost average, sell puts, add to your position, and don't get shaken out of your stocks holding a good company like SoundHound. Don't forget, guys, you can sign up for Discord, training course, and coaching at any time. I would love to help you. Investwithcorey.com. Links in the information box below. Click on training, watch the video, and then you'll be able to book a call with my team and I so I can help you grow your portfolio and retire early. Thanks so much for being here, guys. I will catch you on the next upload. Take care of yourselves.